Good morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
That was good. I had a couple mornings where I just had a really big winner, and what I usually try to do there is just size way down, or just kind of walk away and study a bit. Friday it was Adobe. I had puts on that, and when a stock like that drops more than they think it's going to, um, the options go nuts. So yeah, kind of taking a win there. I think it's not really the easiest conditions right now, which is where the work that we do is so much more important. When spies, gaining 1% one day and giving it back the next day or over 2 days, you kind of want those things that setups with some real strength to them, and that I think is something we're pretty good at finding these 20% movers that I kind of joked about at first. I mean, we're really doing it consistently. So getting the right position and sizing in those has been a big focus for me.
Yeah, definitely living some of the stuff that you've just kind of casually mentioned, trying to pick up, like, getting taking advantage of our work. This week was big in that regard. Um, I had rum, obviously sound, RGTI. That Gurn call was amazing. I mean, it didn't. None of these was full position in outside of sound, because that's a rinse and repeater right now for me. But the just kind of like taking the pressure off myself with getting sizing right in several plays instead of trying to get the one and manage one or two trades in a bigger position, just giving them time. Seems like that's all we really need with our work. If you give yourself a little bit of time on the share side, um, you're gonna be fine. I know that the options a little trickier because you have to time those a little better. Um,
Yeah, yeah,
but some of them, when you learn how X, Y, or Z moves, the time isn't as much as a factor. That's definitely above my pay grade, but I've noticed that. So just even like Gurn's a great example. I mean, I had 120 shares. I wasn't worried about the position at all. I didn't have to micromanage it. Didn't wake me up at 3 a.m. or nothing like that. And then it goes off for 100%. You just take the win, and that's been working a lot more for me than trying to pull off a lift. Trying to repeat that where I'm full size every day. I'm buying more. I'm scaling out a little because it did get a 10% pop. I'm trying to get back in. Just a little bit easier right now with the work that we do, especially when you find 20% runners.
yeah.
When you said that, I started tracking that, and it's every day. It's every day that one of the ones we're on goes off lately. And for me, I'm five. I think 5 to 10% is cool. So 20 is those are doubles and triples for me over here.
Yeah, and that the piece of the work. I guess it's probably been about like 18 months now where I really made that a focus, and even some of the stocks I follow are they're expensive per share, and so some of it's even been fractional shares, or I'll own like 2.5 shares of Ulta or something. But the thing is, the pivots are so strong, and they make this power move. You have to get out of the options on that first big move. You really can't, just linger there. And I'll stick on Ulta just for a minute here. So 408 pivot on Ulta. I had that first to the downside, and then kind of broke through that, and so I built a little position there, and then had that a huge move on last earnings, and so I got out of the options right before 500. It's like 492, something like that, and then it dipped back below my pivot at 480. You can't really hold options through a 20-point pullback like that, in my opinion, especially given what happened the last time it was at 480 and rejected. So, to have just a couple shares there, you get that extra leg up, went all the way, over 560. We both kind of thought it'd pull back on earnings. And now, it's going to set back up again. I think it probably goes back to that pivot. But yeah, shares, I mean, even as an options trader, which I define myself a little less as now, but you still you got to get some shares if you want to actually really get a piece of the work that we're doing, because that time is always ticking away. And to play options with time on large stocks, you get into the tens of thousands of dollars in a sensible position, like a position that's not going to decay on you too fast. So I think that most of the leaps I talk about are on the cheaper stuff, and it's you pair those with shares, and there is a lot of complexity to it. I think if you don't have a lot of time to put into this, um, there's kind of two ways to do it. One is options, quick hitters when you're there at open or whatever time you're there, and they either work right away or they don't, and you just move on. Or you just get in some share positions that you don't really have to manage as closely. You kind of know the spot, your target, what you're looking for. Options map that out. You know the spots to add. You know what it's going to look like if it breaks down, and you need to get out. But the point is that you're not on the minute chart, and if you're not someone who has a lot of screen time, or 5 minute chart or whatever, then you do need to look more into those share positions we talk about.
Yeah, for me, I mean, it's options first traders, kind of the cart before the horse. Kind of always has been for me, just in the mentality
Yeah,
aspect. I think you need to know the chart first, and the shares is just easier to kind of learn that, and then follow the options along that they make sense and they're affordable. Almost like a secondary play when you know the chart. It is cheaper to buy a contract than to buy a large share position in some things, but that trade's
yeah,
going to be a lot shorter, and the moves, I mean, for me, if I was gonna ever like trade options, it would be, I'll use sound. It's a perfect example. If I get out at 8 or 9 and it's still running, and the flow read comes in at 10's possible, well, that's a way to like get back in, in a trade without having to buy a full share position. Instead of having to buy, $8 or $9,000 to get 1,000 shares, I can just buy, a contract for a couple $100. That's always kind of made sense to me. If I was gonna trade options, that are covered calls, obviously. But again, it's learning the chart. It seems like the most important thing, for you to do up front, and you're not gonna do that looking at. I mean, I can pull it up here. You're not gonna do that looking at the options contract list over here.
yeah,
You're just
yeah.
not. I mean, when you're looking at this, you're off the chart. You're just not looking at the chart when you're looking at which one of these fucking matrix levels am I gonna buy over here. Um, so yeah, I guess I like that in general, and that's kind of the 2.0 of the what we used to always say is know the chart, or know how they move. Well, I think you should know how the shares move and then how the options relate to that first. Um, and people are missing that. I really do think you get those
Um,
1% moves, and they're like, well, my option didn't do anything, or I got a 1% move over here, and I'm up 40% on my option.
yeah, right, and that's where some knowledge of the Greeks come in, and I mean, especially, and this is why buying contracts early in the day can be a bad thing, is because the IV is a little higher, and so the premium's kind of jacked. You might have a kind of a funky spread on the option to begin with. So you get in something where you got the direction right, but you're still down, you're down 50, $60. I can give a concrete example. So Dick's Sporting Goods had a pretty big earnings beat. I thought it was going to go the other way, but I had options on both sides. So the one call completely made up for the puts. But the point is that if you didn't sell that option on that initial spike, the difference. So like let's say the underlying went to over 220, so the contract, I think it was like $600, or it was like 220C, $600, whatever. But the point is, if you didn't sell it right then, after that pullback and it came back up, even though the price went back to like 218, $2 difference, the option contract was $150 instead of 600.
Yeah.
So that's what it was like to sell it. Imagine if you were buying it. that that the way that the premiums shook out after market makers did their thing or whatever, um, you have a $2 difference in the stock and a $350 difference in the same exact contract just about an hour and a half later. That's what you're dealing with in options, and that's why you have to be careful. And I think you just have to take your money if you're up on them, and don't scoff at 50% gains. Just sell the damn thing,
Yeah.
especially if you just have one. So, um, and I don't. What I hate to see people learn that the hard way, because I think you could learn it without losing money, and that's kind of what I hope for people.
And I think that's what I mean. I'll take a little bit of credit on the 2 to 1 stuff that we've been talking about and using is you're just playing the volatility, and that makes
Yeah,
more sense because we see a reason for volatility coming in. We know the time. The time is out of the question. It's going to be when the ER gets released that morning. It's going to go up or down vigorously because of whether it's oversold or it's overbought right now, and that makes sense to me because you can get into a window for options. But again, we're playing both sides of that. You're not picking one side or direction because if you do, you're probably washed on that one. Secondary had one that went the wrong way and he still was profitable on, but it's because he's playing
yeah,
the volatility, in my opinion.
it is, and it's also you got to be in the right contracts, and so there are situations where, and this is why I didn't trade Tesla through earnings, because even though like it ended up like way out of the money puts would have worked, but the point was to trade this in a way where I feel confident both sides aren't going to lose. It was going to cost like $1,000. Not going to do that for earnings. I just thought that's way out of my comfort zone. I'm in the like 150, 175 for the total position usually. And preferably, I mean, for some of them, the best ones are like $80. Like WD-40 was like that, $80 to 400. Um, and it's the quieter stuff that's easier for me to read anyway. But yeah, so it has to be the right setup, and the contracts have to make sense. And if you don't feel the need to do every single earnings play, and don't feel the need to do especially the real popular ones, a lot of times they'll move things around pre-market because they can do it, just to zero out some options. So you don't want to get stuck in that situation either.
Kind of a 2 pointer, but for me, like especially, it's just a completely different. It's a completely different ball game for me because I'm looking for the pop to happen or the sell off to happen, and then it to kind of prove itself, find a high or low, find a bottom with a 3 day rule, and then play that because I kind of have a roadmap, and
Yeah.
it seems to me that you could translate that over to as well as kind of the better time to play a short term option because you just have more information at that point in time. I don't know if the
Uh,
options need a
well,
3 day flush if that changes things on those premiums, but just seems to me like we're apples and oranges a lot of times because I get excited and people are like, well, I just got my ass kicked. Why would I even look at that? And it's like this is a great setup now. Um,
yeah, yeah. Well, one of the and what you're just talking about, Ulta actually did that, and so I had posted about Ulta in the earnings page, wasn't really liking it as an earnings position as much as I did Adobe. And the reason was I didn't see, like, Ulta in the past has done the big like 18-30% option move. I didn't really see that in the flow. So I was like, well, I'll put $60 in here. I'll just make it back tomorrow because I expected to lose it. And I did. The options were completely fried, but I put in the morning note, I was like, call Ulta calls early. And you know, the less I write, usually the better the trade
yes,
goes. It's just
yes.
sort of how it works. And so that was just right out of the gate. Um, those premiums were just crushed, and they weren't crushed because Ulta was down 5%. They were crushed because it fell below the expected move. And that is, in terms of buying options, that's the best time to enter. Everyone's just getting rid of what they have, trying to get something out of it, and you can get a great fill. And often on a stock like Ulta, you're up 50, $75 before it even actually moves. And that's what happened there. And then it made the move back. Um, I kind of thought 530 was sort of what I was after. Ended up going up to 544 and, and then pulled back a bit at the end of the day. But, the point was those contracts went nuts. Trade was pretty easy. Never really even tried to break down. So yeah, that is actually the the next day, less risk, and you have control over the trade. So I'm willing to do a bigger position there than I am through the actual earnings.
Yeah, the second part of that, and what I don't know if people are, I don't want to say people are missing it, but I think it's what I see that option traders don't use is I just look at I mean, the volume's important to me, and I don't care if it's earnings or a news event or whatever. But if something trades like 4 or 5x its 30-day average of volume, I mean, if we're like, sounds a good example. If we go from like 50, 60 million to 2 or 300 million, someone's off sides. Someone's just gonna get caught off sides, and that's gonna have to fix itself the next couple of days. And I don't try to figure out who's offside, why they're offsides, or anything. I just know that volume has to fix itself. You're
Yeah,
usually not going to see outside of like an FSR news event. You're not going to see 4 straight down days. You're just really not. That usually happens more to the upside when people get caught offside because they have to cover their ass. People are going to make them pay more to cover their ass. So that's something that I mean, obviously I play shares, it's only upside. So that's something that I just use for myself. Um, but I don't think option traders look at that like how much volume did this have yesterday? Because that's going to naturally create volatility um, in the next few days, just because it kind of has to the wave has to kind of settle back down. Um, and again,
yeah,
sounds a great example of that.
and after some of the bigger moves to the downside, there is there really is something to this mid candle recovery idea. I don't know what goes on, mechanically with that, but a lot of the stocks, especially the bigger stocks, they will, recover a big chunk of that move down, and then from there they might break back down. It's noted that a couple others, but there is like a sense that they're repositioning and they pull it back up in order to do that. So whatever, like even if they want to short it, they pull it back up to get their entry for that. Then they get their puts, and a lot of that happens through the bid side on the in options. But yeah, there's an opportunity there, and I think the main thing you have to do, especially given the fact that a lot of these stocks are now revisiting some pivots, is you don't you don't just go all in at the pivot when it took a lot of momentum to get there. So Snow would be a good example of that. I was interested at 172, didn't put up enough of a fight for me to really get in it. A couple little scalps here and there, but so now I'm like, okay, let's breaking down. Now my next pivot becomes relevant. 150, 27, whatever it is. But you just want to be patient. You don't want to get in this mindset that the market is just ripping by the dip, by the dip, by the dip. Which dip and why? And software is not a dip to be buying right now, in my opinion. Um, Hardware is a lot stronger still. So you have to have a. That's what putting in the work's about. Like you have to actually have a thesis on it, other than this chart has this shape that I found, or this stock hit this price where I bought it last time. There's more to it, and it starts with flow and TA, and then the broader market conditions are kind of a function of that as well.
Yeah, I mean, I don't talk about it here much, but RTL, that's why I think it's so important, is because if you're not getting over, I call it the 30-day average, what's basically been going on, if you don't get increased volume, the market maker is going to control the price. They want it to stay
Yeah,
in a certain price. They kind of show their hand every day with pre-market high, pre-market low, yesterday high, low, where they want to control the price at. And uh, when you just put those two together, it gives you a way better sense of where things are, what needs to happen to get things to make a move outside of that box. And um, the box is normally playable, especially with some of the bigger names that you find. Just that you can play as long as you don't need 300%. If you can live off 30, you're probably good playing
Yeah.
pre-market low, yesterday lows on options. Just as long as you keep it close to in the money, right? You're a strike or two out, or the strikes in the box. Um, and when I think when you start getting those mechanics instead of just it's going to go to the moon or it's dead, you kind of tighten your game up, and then that 30% becomes better for you even on the option side because you know it's repeatable. Because you have the levels every single day on any stock. Then you just find the premium that works for you. Make sure the range makes enough of a move that 1% actually moves the premium, that kind of stuff. But I think a lot of that just goes missing, and we go straight to it did it yesterday, it's going to do it again. And having that why and where, I think, is way more important in the long run, just to learn that. Because there's simple levels. If you don't have my system where they automatically chart for you, it's not hard to draw 3 or 4 lines every morning. It's just not. Yeah, so stay on that in the long run because I still think that's probably one of the most valuable things we do. And the really good traders, I'm not going to say any names because there's a couple of them still in here. When they came across RTL, that was just the last thing they needed because they had everything
Yeah.
else. They were doing the work, and then they're like, oh wait, this is why it pulls back this much every day, and this is the level I should be looking for. And our charts room is full of that. There's a person with a page that draws those lines every day, and it's not because they don't work. It's because it's probably the best roadmap you're ever gonna find.
Yeah, absolutely. And on that comment about the market makers, one of the things that keeps me out of trades, or that I kind of wait to see, is I the whole reason I even follow whales and option flow is because those are the people with the most control, or knowledge of what's going to happen. Finding the flow that matters is important. I don't think you can't just look at it and see some out of the money contracts and say, oh, it's going here. But sometimes you can see where they're really suppressing a stock. A lot of times that's where the deep in the money puts come in. Was happening with John Deere for about a week. It's definitely happening with Snow right now. And on the option side, a lot of times that's just going to give you a lot of flat days, and that's not. You definitely don't want to be in something short expiration there. So that was why, like with John Deere, I said you add under 360 and you wait. It's going to 380. But if you had seen the success of the trade to that point, like to the move to over 370, and you tried to enter there, and your expiration was too short, um, you'd have gotten stopped out. It would have just bled you to death. And then finally they let it go, and it popped and broke through. So this is timing on options is huge, but a lot of times what I see market makers doing is they're kind of buying time for a longer range move that I think is going to happen. And why they do that, I don't know. Giving themselves time to position, or giving people a chance to get out or whatever. There's a lot of contract swaps where there's just like a hot potato going around. So yeah, you get into a lot of complexity there. But my point being, we do try to get into trades where people are offsides, and so being able to recognize that versus the stocks that are more tightly controlled, that's important as well. So definitely, there's a lot that goes into what we do, and I think what I try to do is I try to give the simplest version of what I see. And the I don't want to talk like I'm talking out of ego here or something, but I think I don't want it to look so easy that people just get an Unusual Whale subscription and just start hopping into option
Yeah,
flow.
don't do that.
If you're gonna be a flow major, let's talk. Let's talk about what you're doing and what you see, because there's aspects of what I do that I'm not just going to put out there for everybody, because I think it'll just make things too confusing. But if you really are wanting to learn that, let's have that conversation, and we can talk about it, and then other people can learn from it as they want to. But it always makes me nervous when people spot contracts and they're like, "Oh, look at this one," and then they jump into it. And they might be right, they might be wrong, but they didn't have the process to get to thinking it's good, and so that can be very dangerous.
I'm a professional professor flow reader. I don't try to read flow. I try to read your flow. That's
Yeah.
that's where I went, and along the way, I've learned some simple things, and I haven't said it in a while. I haven't said it in a while because it hasn't been a part of the game. But free in a sideways or down market, there's some things called free money flow, and
Yeah.
it's just people selling contracts because they know they're going to be worthless, and that comes up in the reads all the time. It hasn't since this November low's been around. I haven't seen a lot of that. And then the other side of it is it's insurance. It's really just insurance for big money. That's what I see. Like they want a position. They don't want to put today. They don't want to put $200 million in it. So they're going to put 30 or 40 grand in options in it, and then that's where the date comes in. So that they're like, I want to own these shares, but if this doesn't happen by this date, and that's kind of how I just dissect the flow read from you, and then translate it to the underlying pricing in the stock to try to figure out if we're going to get a move. The most cleanest example of that was Lyft. That the by
Yeah.
far, I mean, it just kept piling in on a short-term date. It was 100%. So either someone's protecting themselves there, or they're building a position. And that one seemed like a little bit more protection in my opinion. If this does pull a Carvana or a coin and just takes off, I don't want to be off sides, because
Yeah.
again, those big money people play both sides of the market. Um, so for me, that's as far as I mean, I'm definitely mindful and pay attention to it, but it's a different kind of read because reading Unusual Whales is damn near impossible. And I'll talk about your ego if you don't want to. There's just no one. There's no one like you, and I don't know what you see or how. I haven't said it here, but I'm gonna say it. There's probably a reason why you don't share your filters and your screen setup in Unusual Whales, because there's something over there that you figured out that you couldn't do with training wheels. Like you need the time in it. And yeah, I just think that's how I use it. And it's keep it simple, stupid for me. Like don't get too cute. Trust your sources. If you're in a room, you're throwing us the $40 a month. There's a reason for it. Try to figure out what story we're trying to tell and what we see. Another thing, when you have four strikes, when you have sevens, eights, and the next month there's eights and tens, and I have leaps to 11, that's like a no-brainer to me. Like, okay, there's a
Yeah.
lot
Yep.
going on there, and that's I don't like try to dissect it or figure it out or anything like that. It's just an indicator or a signal that I picked up over the years.
Well, and then if I'm posting, still posting out of the money on something that's already made a huge move, like SoundHound, I'm not a FOMO guy. I'm not a hype person. I'm just like, I think it's going to $10. It was kind of a double take at what I was seeing. But the good thing about SoundHound was you should have already been in that. And, at that point, you re-enter maybe with smaller sizing or whatever. But we kind of had a sense of that momentum. And that's the kind of momentum I follow. It's not, we're in a moment in the market where there's a whole lot of pop and fade happening. And you just got to be really careful about, CrowdStrike goes up 2%. You think it's going to finish the day up 4%? It's probably not. So, you want to be careful about that. But yeah, so that's kind of another tell, I guess, of mine is something that's already just gone crazy. If I keep posting contracts on it, that's not my inclination to do that. It's got to pass a lot of checks for me to have that kind of belief in something continuing like it did.
Yeah, if you didn't take your tens on sound, you're an asshole. I'm just gonna say that out loud.
Yeah, yeah,
You're an
right.
asshole. And if you chased
Yeah.
and you're bagged because the flow 10 came in, you're you're also an asshole. I had a buddy that, I mean, I talked to him on text a lot. It's not in the group, but he bought, I think he bought like 560, seven something, and eight, and I'm like begging him to take tens. I'm just like, take it. And what finally sold him was like the pullbacks. I'm like, this is gonna pull back 20%. You're gonna be able to trade it again. And
Yeah.
if you can go search the group right now through the week, it was six, then it was seven, then it was eight. I mean, we're just psychologically moving up through this gap on that chart. So for me, that holding hope or late, like don't do that. Don't do that. Just take the trade. And the best thing I can say to anyone on the share side is the second you get out of a share trade, where are you going to re-enter? That's what needs to be in your head. Whether you
Yeah.
scale out a little bit or you dump the whole position, the first thought in your head needs to be, where is the perfect reentry for this trade? And it's usually going to be on an RTL level or a higher low. And that's where the real skill comes in share side. Sound on Friday was a good example. It just wouldn't give up the level. So you could have scalped that. But again, you can't be greedy. You can't buy in and know at like, let's say 870 or right at 9 and be greedy with it. Like it's going to go to 15. That was his number. Just because that flow
Yeah.
read came in, like that's not what you do. You have to kind of learn where it's going to go, where resistance, the next resistance is at. And it all, for me, that all just relates back to RTL. Especially, again, what we just talked about. If the volume's not exceeding what it did the day before, if we're at 70% of the normal volume, the market maker's going to win. He's just going to.
Yeah.
He's gonna get
Yeah.
it back to where he wants. So learning that in the long run, instead of just to the moon or to the it's gonna die, is the real skill in this game. And you need to perfect your craft, no matter your style, because it all relates. You're still on the same field, so to speak. Even if you're a run pass option, or you're the deep ball, or you're just ground and pound, whatever you are, we're still playing the same game.
The yeah, and my version of the, when am I going to re-enter has been coin, kind of all the way up, and so Thursday, Friday gave a good chance to re-enter coin. But here's, like, we want to talk about greed. So coin dropped 5-6% pre-market. I think it opened down 4% or something. My I get another simple note. I was like, coin calls. I think that was all I said. Um, Jumped from 222 to 240 within a couple hours, and then I got out. It pulled back, came back up. But if you were greedy with coin, and you just held your options through the weekend, well, now you're sitting here looking at Bitcoin dropping 5% yesterday, down to 67,000. 70 didn't put up much of a fight. So yeah, now you're sitting here sweating it. Are my options are, I'm going to wake up down 50%. So again, check your greed on that. That was a big win Friday that someone could easily turn into a loss if they held it, just thinking that you're going to wake up and coin's going to be $300. There's a lot of that going on, especially in the option world. So not something we do. You'll get in trouble with us if you start pulling that stuff.
At this point, I'm gonna say it again. At this point, if you need more from the professor than coin calls, you're chasing, and you're an asshole, because
Yeah,
you've been on coin so long that people should just know the game over there by now. They really should.
yeah,
I mean, I don't
yeah,
you trade that thing. I'll just say weekly because I know it's more than that. But every week you trade coin at some point in time, and I think you've done that probably since last summer at least. At
yeah,
least. So if
yep,
you need more than that, you're late. You're just late to the coin game. You can follow and watch along, but the ground level of that work is done, and it's just like riding a. I mean, it's like riding a bike for you, but you're down there popping wheelies on that one at this point in time. That's just
yeah,
that's just what it is there. Why we're on crypto? Let's go over there a little bit. What's up with crypto on your
yep.
end? What do you see?
Um, so the breakdown over the weekend, not really that surprising. I think get a little bit of recovery today. The previous all time high level, I don't know, TA side, that seems like it's going to be significant. I don't know what that number is, 69 1,000 or something like that. But
Shout out Goose.
yeah, I just it looks pretty healthy to me. I think the most dangerous thing you can do with this crypto stuff right now is chase the downside. I always talk about not chasing puts. The what I sort of expect is, because we're more interested in the stocks, that the best downside moves are going to happen overnight, and then you get a recovery, and then maybe it breaks back down, below. But yeah, I'd be real careful early in the day on that. And then as far as flow goes on those, I can just give you like a kind of a quick example. You need a lot of rinse and repeat. Like CLSK is a good example of this, where I think 20 is going to stay relevant, and so then it's about where you enter, based on that. I don't know what our number is, but in the 16s probably I think is probably good.
Yeah, yeah.
But yeah, so that's kind of where I think you want to see the pullbacks in the crypto stocks. You want to see how they react. I'm of the mind that as we approach this halving thing, that we could pull back another 10% or so in Bitcoin. That wouldn't surprise me at all. But that event is going to be significant, and I think in the end we will break back through all-time highs, and the crypto services are kind of where you want to be, because as Bitcoin ages, mining gets harder and harder to be profitable at. So if you're going to invest in a miner or trade a miner, I don't know, not invest, that would do that. But if you're going to trade a miner, you want to trade the ones that already own a lot of Bitcoin. That's what I'm going to put out there. Because there are going to be ones that are going to really struggle. So keep track of their market cap versus how much they own, and that's a good way to separate the winners. CLSK. Last thing I'll say on these individual names, CLSK is a lot more efficient than most people with their operation. If you just look at their numbers, they kind of outpace Mara with that. So I still think the biggest upside, other than Coin, MSTR, which are a different ball game, but the biggest upside of the smaller ones to me is still CLSK, just because of the flow picture I see and just the way their business is built. They just seem to have the most sound footing to me.
Um, lot to cover here, so I'll start with there's no goddamn option flow read on Bitcoin, so it's hard. I don't have volume profile on Bitcoin, so it's hard. Dirty TA side 64 is what you want to see as a higher low here for me. Um,
Yeah,
60 I wouldn't mess with. That's a coin flip. Um, Time is your friend. You're going to need 3 or 4 or 5 days at that level to kind of build some support. I look at the price. I really don't dig into it too much, volume or any of that, because it's not a security. Let's just start there.
yeah, yeah,
Um, so for me, I welcome the pullback, and then I just look for the divergence in the charts that I know, and kind of wait for the go signal. I let Bitcoin move first before I get into those, and that's just the
yeah,
way
yeah,
that's the way to play that. And it's a better indicator than Upstart, but it's a similar idea of it's gonna the dramatic moves in something is gonna happen in other things as well. We have a whole sector of crypto, so everyone should have a couple they like, but following the divergence of the two, because currently the stocks have pulled way back as Bitcoin. They pulled back to a level lower than they were when we were in that 42, 45 needs to be the high, and we're at 60. So it's just kind of what made sense 3 months ago isn't going to make sense 3 months from now. So it's a constantly refreshing the thesis on those. But I will say you should be your own sailor of your ship in that regard. A little pun there, a little insider
yeah,
there. But the services for me is still where you want to be long term. Um, and
yeah,
then and yeah, that's just where you want to be. And you should already be sitting pretty if you're an investor. I know we don't talk a lot about investing, but yeah, and every single service one has moved dramatically. Some have moved 40% already. So um, coin has moved a lot more than 40% already. So you should have been set up there as an investor, in my opinion.
Yeah, and I'll say it, the MSTR idea of being a great way to have Bitcoin exposure. It's better than the ETFs. That just keeps proving itself over and over again. And now, now we're at a point where they're getting pretty close to consideration for the S&P 500, which is going to mean a lot of funds are going to have to spend $1,800 a share on this thing. Stock split is definitely possible, and then just the way Saylor uses the shares to buy more Bitcoin and that whole thing. I just, obviously options on this are out there right now, unless you're trading it on Thursday and Friday. But I would just tell people, as someone who did short the big collapse on this, I wouldn't try that now because I definitely don't see what I saw then. And that was for me, it was a breakdown at it was like $800 to like 370, and then again, to like 200. I don't see that. I don't see anything like what I saw back then. So don't look at the chart and say, "Oh, look at this bubble." It's kind of like shorting Nvidia. Oh, look at this bubble. Compare it to Cisco or Tulip bulbs or whatever.
Oh my goodness.
But you don't know where we are in that. We might be 1/3 of the way to that bubble you're seeing. So don't get cute just trying to map and compare charts to each other. This what MSTR did was completely masterful. One of the most incredible things I've ever seen. I thought it would happen. I didn't think it would go here, or I would have bought more. But yeah, don't go just shorting something just because you think it's up too high. Very dangerous to do that. So I see a lot of that on Twitter. So that's why I bring that up.
Perfect, perfect. Did you cover vocabulary words through that process, or do you want to take a couple minutes on that?
Um, yeah. Okay. So I just want to talk about what I mean by. You ever see me say clean read? When I say that, what does that mean? What does that mean to you?
That it's like one-sided. Like it's obvious what they're doing, and it's kind of one-sided. There's not like a hedge to it. That's how I've always taken it. Like they need this almost. There's not a lot of.
Um,
There's not a lot
yes.
of. It's not bought sold in three or four different strikes. It's literally one strike, not one buyer, but one strike. They're on the buy side or sell side or what the fuck ever. It's just clear. It's not. There's not four or five things. The pie is all cherry. You're not getting a value pack at Costco with four different kinds of pies in it that you have to figure out which pie is the best one or is going to win. It's one kind of pie.
Yes, that's a very good summary of that one. And then when I say, I'll use this phrase sometimes. I'm like, whales can't hide what they're doing. Similar idea, but when I say that, what is that?
That there's just so much
What kind of
fucking
stock is that?
a stock that doesn't get option flow ever, and it has
Yeah,
some option flow that is obviously somebody with some fucking money and not retail.
yeah, yeah. Very good. Yeah, so those are kind of two pretty big ones that I'll say. And then on the other side of it, when there are some stocks where like the TA is good, um, but I'll say something like the reads a little cloudy or murky or something like that. How do you take that?
Half
And
position and wait.
how does that change it?
Half position. Wait till Wednesday.
There you go. Yeah, exactly. Because that's important because it doesn't mean I don't like it. Usually it means I like this spot. I'm expecting to see something. I'm anticipating flow, but I try not to specifically list what what I'm anticipating seeing because I don't want to confuse people or get them to jump the gun or whatever. But yeah, there's stuff like that, and then on the with you on the flip side, like if the flow is just great and the TA is not there, doesn't mean I don't enter. Usually it's kind of 1/4 sizing, or instead of doing the beef trade, it's sort of like options. options only. But I just wanted to emphasize this because a lot of this is, especially the weekend work late in the week. There's something we're expecting to see in the middle of the week, and so many times now we do end up seeing it. We've been at this long enough. We know these stocks that that work in collabs. Don't just read collabs on the weekend because there's stuff there in the middle of the week that is some of our best work, and you can get a piece of it. You can get the whole trade done, like with Gurn. But yeah, I think just try to focus on what we mean when we say things, and I'm happy to always clarify that if anyone needs that. But yeah, we kind of have our own vocabulary, not trying to be secretive about it or anything, but just kind of learn to speak our language, and I think you'll do pretty well.
No, it hasn't happened in a while, but there used to be a time, no, probably in the November to January, or excuse me, September to January thesis. It was present a little bit where I would look at a chart and I'd be like, there's a gap down here. I don't have nothing for support at all, and you'd be like, the flow's great. Um,
Yeah,
that used to happen a lot, and I think that happens more in a sideways or bear market where they're defending positions, and that's hard for me to trade. The other side of that's real easy for me to trade. I love when you say cloudy and I'm on support because, I mean, I've seen it happen so many times where I'm like, I guess I'll say it and I don't take it the wrong way, but I'd over trust your read, right, and not my
yeah,
TA, and
yeah,
I've gotten rid of that. I'm like, yeah, professor will catch up with me eventually, because I'm just
yeah,
going to buy in the support level, and it's usually Tuesday or Wednesday. You'll see something that if you read Sunday notes and Sunday voice, you're just like, it's not there, it's cloudy, it's murky, and that will flip, and you'll be like, oh no, they're buying X Y Z, and I watched that happen enough that again, half position for me if it's good on the TA side.
Well,
Um,
you were on me about hymns for, I mean, over a month,
yeah,
and I just didn't have anything. And then
Square
then
too.
I was like, oh, okay, yeah, yeah.
Square was the
So
big one lately for me, where I was like, I'm buying these. I'm just buying this, and
yeah,
it eventually came in, and then we popped through 84. I will say that though, those positions I take money from when they're not definitive, when they're not the 15 CLSK over and over and over and over and over again for 2 months.
yeah,
I just take money in those a lot of time. Little on my side, and I'm only gonna say it because I don't want people to think I'm a genius or that I'm pulling shit out my ass or whatever, however you want to put it. But I'm a level two reader. I really watch time and sales. So when I see things there, I don't really know how else to translate it. So I use spicy a lot, or this they can't hide, or this is not retail. That was Sound on
yeah,
Friday. Sound had $1 billion traded in shares. That's not retail. It's not. There's no way
yeah,
retail traders are trading $1 billion in a stock like that, especially when it's up 400%. Just not happening. So most of my stuff is just trying to get across that something big is about to happen from what I'm seeing in time and sales and level two, because that's really what I'm good at. Is I've sat at these screens long enough. I have my filters set up on those, and I share those with people. Like you don't want to watch single shares. That's going to kill you. You want to figure out, is it 100, is it 1,000, depending on the size of the stock, and kind of filter that out. I actually have two time in sales. I run it on the sidebar on this side of my screen. Here, I'll throw it up real quick. I run it over here like this on this side of the screen, bam, bam, and then I have it down here for big orders. So I'm looking at it on two levels. Again, a lot of things I like to do, multiple time frame, multiple time and sales, but it's just I can read time and sales good at this point in time. I don't expect anybody, especially the ones with a job, to sit in front of their computer 4, 5, 6 hours a day watching time and sales. I just don't. So it's kind of like your flow read. You just kind of got to trust the indicator that we are on those I don't know, those metrics. I guess I don't know a good word for that, but that's as simple as I can get that.
yeah. And I guess the one more, and then I'm going to get onto copper real quick. If you post a position that you have to me, and the first thing I say is have an exit plan, uh, that's not. I'm not going to tell you to sell something.
Yeah,
But
yeah, yeah.
I think it's danger. You're in a danger spot, and you don't want to emotionally get to a point where it's like, well, I'm down 40%. I might as well hold it to zero. That's not a good way to trade, because yes, you get big wins with options, but you have to making up for the losses is why a lot of those people struggle. And if you're 2 home runs out of 10 trades, that can work. But what about that week where you don't have any home runs? What about that week where you only get 1 home run? It'll just bleed out your account. So, just deciding to not take those massive losers, big step for any trader, and got to get to that point.
Yeah, I just quick ad. We'll go to Copper. I ain't trying to help you high point. I ain't.
Yeah,
I
yeah,
don't even high point. That's not what
yeah,
I'm trying to help you do. I'm trying to help you check your greed. I'm trying to help you
yeah.
figure out that this is repeatable. Because when you figure that out, those two kind of help each other out, and that's what's going to make you a longevity as a day trader. So where's this going? Where's the top? If I call that for you every time, you're just going to lean on that. You need to figure out that, hey, this 10, 20, 30, 40% works for me, or this 20% and keep a little works for me. I need to find out where to re-enter, and I can do this over and over again. That's way more important than hitting the one trade and getting it all. So that's I'm a little mean in that regard. That's when UMP comes out, because I mean we do this every day. So figure out that it's repeatable. Figure out what you need. Figure out your sizing. Way more important than getting the top, in my opinion. Copper, sir.
Yeah, Copper had breakout I was looking for. So in around a 380 pivot, I said like we're probably gonna move to $4. It's 412. Next big 420. Another douche shout out. The picture here looks pretty good. And then on the aluminum side, my only pivot on aluminum's 203. It's 204. That's going to probably go 210, 220. Is kind of how it's looking. So yeah, copper very strong. You should be in some of this, but there are some laggers that I think will give us some opportunities. So that's really positive. And then want to talk about uranium for a second. Uh,
Yeah, can I say
uranium was at.
can I
Oh, go
interject
ahead. Go ahead.
copper? So copper, I don't even
Yeah.
try to predict. I don't even. I just trust the professor when he says the sector's good. But again, if you search the group this week, the SCCO, I like 70 to 90 was the first one. The reason I knew the Hunter breakout was coming is again because I watched time and sales. I watched the chart. I know the stuff like that, and they can't hide in that stuff. So again,
Yeah.
it's taking your information and applying it to what you do. I don't know where aluminum, copper, silver, gold's going or what it's that's above my pay grade. Same with oil. Oil I know a little bit, but the rest of it you have to use professor's information or whoever. I don't care if it's some other guy. You have to use their information and apply it to you instead of trying to like follow it like religiously.
Yeah.
You just apply it to your system. Sorry, go ahead.
Yeah. And then uranium. So uranium was at its most oversold spot since 2022, back when it was like $45. But it bounced off of under 85, found some equilibrium there. And what we're looking for in our longer term uranium stuff is for a move back to 100 for uranium per whatever unit they sell it in. The thing about uranium futures is you can't follow it by minute because the deals are all done in this sort of clandestine negotiation. Obviously, you can't just go out and buy uranium. It's a little different than a lot of commodities. So you got to be mindful of that. But I still like our spots there, and definitely think it's something that we should stay on. Um, this pullback, it just it ran really hot. It's cooling down. The stocks have held up pretty well during that pullback, so I definitely would stay on that. And then last one for me, natural gas, still struggling. This 160 area is, I think, important. So I think you definitely don't want to see it break below 150. But if you're going to get into natural gas, you want those oil natural gas combo stocks. I think that the ETFs are still gonna they're gonna punish you a lot on a bad day, and that's not the case with AR, CHK, CRK. Like so, I still prefer the individual names there.
Yeah, you just for me again using the information, you just find a couple charts in those sectors and learn them.
Yeah,
It's the same as Bitcoin in that regard for me, but a different commodity that you're following. Um, Wish we had some flipping more cocoa charts besides Hershey's, but I think that move already happened.
yeah,
Let's get into SPY here. Is that good with you?
yep.
Um, Hold up, I gotta get this weekly candle out. Kind of a sideways week. 113, 105, excuse me, 513.44, 501, 43 for you, 519.69. Shout out Goose, 507.70 for me. I kind of covered it Friday, so I know where we are. But 508 was the bottom, 517 was the top. I said last week I'm not going to get in front of a train, and I still kind of feel that as the market in general. I don't see it. I mean, there's no reason just to drop off here, and if it is, it's going to be some pretty big names. The volume's healthy in a lot of those big names for me, so I'm still kind of in that same thesis of the moves are going to be up or sideways, probably more up than sideways. I didn't mention it earlier, but I do think we are finally getting to that A to B option that I said probably a month and a half ago, where the bigger names are going to have some pullback. That's not the sky is falling, so SPY shouldn't go test like 470 or anything like that. But they do have to pull back just to be healthy, and we're going to get the rotation into pennies, which doesn't really affect SPY. So that's where the activity in the market will be. The Russell will be going up. But other than that, I do think we're kind of in a tightening right now, because I don't want to say up or down, but I think we're going to tighten here for the next few weeks, especially as we come out of ER.
Yeah.
We did do the 510 gamble, and you did win that. I don't know how you pulled SPY down below 510, but I'm assuming that's a pretty big number on your side. I'm sure that's a pretty
Yeah,
big
yeah.
battle on your side right now.
I told Pac to buy a couple puts in today, and you know, got it 17 cents under whatever.
Yeah, but so
um,
what do you see going on over
all
there?
right, so yeah, I've got okay, so more to read this week than I have in a while, so that's kind of exciting to me. Here's one interesting trade that I see. There's a this cross trade happening where they just keep passing this contract back and forth in these like $16 million orders, and it's 500C for April 19th. And so the idea of looking to defend 500, is over the next month. That's that's pretty significant to me because I look for some downside numbers I can actually identify with here. And then the other one, this is to the downside, is May 17th, 483. So I think any kind of pullback that is significant is going to land somewhere between those two numbers with incentive to pull it back over 500. So I don't think we'll linger down there very long. I got sold puts at 492 for May as well. So that that's given me something to read, and so that's kind of where I think things sit for now. But that's not for this week, so that's just kind of a longer term thing. But for this week,
I got some numbers if you won't steal them.
yeah, go ahead. Yeah,
um, Again, I'm just kind of going off of we're going to be a little more sideways, a little more tightening. I do think the Feds are going to try to throw cold water on the market this week. They talk Wednesday. They have their economic outlook, but I don't think they're going to stop the train. 516.69 on the top end. Shout out Goose on that 69, and then
mm-hmm.
504.91 is my downside. So I do think we have a wide range still, but not going to last at either of those levels too long. I
Yeah,
will probably say We do finish above 510 though at the end of the week.
Nice.
Gave
Okay.
it all to you.
Yeah, that I'm not too far off. I had a little bit more downside 503.53. I guess that's not that much more. That's pretty close. But there's a little bit of option activity. There's some 504 puts I think that might they might try to take in the money. I just don't think they can. And so I kind of look at the body of some day candles and some of the wicks and all that, and
Yes,
just sort of
yes.
try to pick a spot there. And then upside, I've got 513.55.
So you're a little tighter on the upside.
Yeah.
What contract makes you what do you have on topside contracts?
Well, it's that it's kind of the bid side calls above like at the 515 area. I just think they might smack it down if it gets there. So I could probably go a little higher, like the 515, like it'll actually test that. I just don't think it's going to last very long. So I think we reject there pretty fast. So we very well could break up to your number. I just think it'll slap it back down pretty quickly.
Do we finish 510 next week? Yes or no?
Yes.
Okay.
Yeah, we do.
Last one. I mean, we're a little long here, but I think it's important. That September contract, I think was 560. Might have been 530. I
Yeah.
forget. That what's that looking like out there now?
Let me see.
Sorry to
Well,
put you on the
it's
spot.
yeah, no, it's dropped out of the top. It's dropped out of the top 20, and it's flipping bid side. So they're I think they're getting out of it.
Yeah.
I
For
mean,
me,
that's what it looks like.
that's rates getting pushed back, because I mean that's what's going to push the market again to another level is when rates start going
Yeah.
away, in my opinion. Good stuff. Good stuff. You ready to get to work, P?
Yeah, yeah. Just real quick to close. My read is that the floor went up 20 points.
Okay,
That so that 460. I think we're 480 now. Is sort of my floor. But
makes sense.
yeah, let's do it. Let's get to work.
Uh,
Everybody like, subscribe, all
yeah,
that stuff.
follow us on
Link
Twitter.
somewhere.
Yeah, link somewhere.